It seems like Bitcoin just can't catch a break right now. One day it's crashing, the next day the Fed is whispering mixed signals, and now even altcoins are feeling the heat. And institutions might be quietly positioning for a major move. Stick around because today's breakdown could set the tone for the next crypto cycle. Today we're diving deep into the biggest crypto developments in the last 24 to 48 hours. Bitcoin price and Fed impact, institutional activity and ETFs, XRP's price and technical backgrounds, macro forces, inflation, geopoliticals, rates, everything else, market structure, and of course key resistance levels. And we'll end with a forward-looking section on where the market could head next. So let's start with Bitcoin because its price movement sets the pace. Right now, Bitcoin is still stuck below a major resistance at around $75,000, even with some positive regulatory guidance recently. According to CoinDesk, Bitcoin remains stuck near a key resistance around 75k, hinting that the breakout bulls are waiting for is something more than just headlines. But that isn't the whole story because today, Bitcoin rolled over sharply after the Federal Reserve decided to leave interest rates unchanged. Bitcoin fell 3.9%, Ethereum dropped 5.2%, and XRP declined 4.8% as markets digested the Fed's decisions. And that tells us something important. Crypto is sensitive to macro even after the big ETF inflows last year, which brings us to Fed Chair Jerome Powell's press conference and how it emphasized that rising energy prices are feeding into inflation, which could keep the Fed on hold longer than markets have hoped. And that's shifting expectations and taking risk assets like Bitcoin lower. But here's the twist. Some analysts argue that this uncertainty could keep volatility alive, which often precedes big moves. If Bitcoin can flip the 75 to 80k area into support soon, we could see a real breakout attempt. One analyst told Crypto Slate ahead of the Fed's decision, saying the outcome could determine whether Bitcoin gets past 80k or falls further. Now let's zoom out for a second and look at capital inflows. Despite near-term price weakness, institutional demand is still a dominant theme, not just in Bitcoin but across the whole crypto complex. BlackRock and other asset managers have kept ETF flows meaningful. While we haven't got a fresh official ETF inflow number today, the ongoing narrative has been that spot Bitcoin ETFs continue to attract capital, and recent inflows across other assets were noted in Reddit crypto news summaries. And here's something most crypto charts aren't going to tell you. According to community source trackers, there were massive stablecoin transfers, nearly 4 billion, across chains in just the past day, something many analysts interpret as institutional custody or exchange preparation, not retail trading. And right now we're seeing capital rotate and settle, which is the price action you don't see reflected in the everyday chart. But something else is happening behind the scenes. Reuters reports that Citigroup has cut 12-month price targets for both Bitcoin and Ethereum, citing stalled US crypto legislation as a major dampener. Bitcoin's target was lowered from 143,000 to 112,000, and Ethereum was cut too. This kind of institutional commentary, yes, from banks matters because it filters into risk appetite for big money players. Now let's talk about XRP, which has had some of the most interesting movement this week. Despite broader market weakness, XRP has held around the $1.50 level, just above a key derivative options cluster at 140. That means a lot of professional traders have positioned bets right now, and price could accelerate one way or the other if that level breaks. But that's not all. XRP has flipped BNB recently in terms of futures open interest, signaling renewed depth in derivatives markets. In CoinDesk's analysis, XRP broke through the $1.50 resistance on a 125% volume spike, which is unusual in a choppy market. A few themes that aren't fully headlines but matter right now are on-chain transaction activity has hit multi-million daily volumes, which could be an early utility signal. Institutional narratives around XRP are gathering and ongoing, especially with ETF speculation gaining traction according to broader market chatter. But this is where things get interesting. XRP's behavior is relatively uncorrelated to Bitcoin right now, suggesting some altcoin rotation could be underfoot if macro stabilizes. It's worth taking a step back and looking at the macro context because crypto isn't in a vacuum. The broader markets have just had a shock move on oil prices after reported geopolitical tensions in Iran, and it spilled into risk assets including crypto. CoinDesk noted that Bitcoin pulled back to around the 72,000 level as oil and macro news collided with inflation fears. And if you put that together with the Fed's messaging cautious but not easing, you get this picture. Inflation remains sticky, energy prices are a wildcard, and risk assets repricing lower. And that sets the stage for a volatility regime, which can sap market momentum before a big trend change. So at times like this, when fear and uncertainty are high, crypto can act like a risk asset again, meaning it correlates more with stocks and traditional markets than decouples. This is especially true after events like a Fed pivot or a geopolitical risk spike. So let's talk about the structure of the market right now. Right now, Bitcoin's key levels look like this. We've got resistance around the 75k to the 80k level, support in around the 70k range that we've been in for a while now, and breaking either side convincingly would set the next directional bias in my opinion. For XRP, obviously we're battling in and around the $1.50 area. Resistance is looking like 160 and 170. And across the broader market, Ethereum is holding it around that $2,000 level and looking for advancement to the upside. Altcoins in general are muted and struggling, awaiting more macro trend upside for Bitcoin. This is why that matters. Lines matter more when volatility is high, meaning breakouts or breakdowns can be more explosive. Just because price is choppy doesn't mean the underlying narratives have died. Spot ETF products continue to attract institutional capital, and some analysts still see this as accumulation phase behavior, not pure distribution. And this is where it gets psychologically interesting in my opinion. Institutions often accumulate quietly before price confirms the actual move. So where might crypto go from here? Bitcoin needs to reclaim and hold above resistance if we're going to see another leg up soon. Macro forces like inflation and geopolitical risk will be the tailwind or the headwind. XRP is at a technical pivot. Break the options cluster and things could accelerate to the upside. Institutional flows aren't dead, they're just pacing based on regulatory clarity and macro signals. And here's the narrative arc that I see we are currently forming. Volatility continuing until macro clarity arrives. Bitcoin continues to range, trading near the key levels until we can see some kind of economic certainty. Altcoins are carving their own structural behavior right now and really lagging behind Bitcoin, and institutional positioning slowly building under the surface. So here's what you should be looking at for next week. Does Bitcoin hold that 70k area? Does XRP break above that options wall at around 160? And do ETF flows remain steady despite macro noise? Because these signals are the ones that precede real breakouts. If you want more breakdowns like this, please do hit the like, subscribe, turn on notifications, and watch the video on screen now. Thanks for watching.